Hi everyone, welcome to this week's video newsletter for Black Ink Economics. I'm going to be doing this video on Zoom this week. Some people came and told me that the video quality was rough on the videos I've been trying to do on the iPad. We're just going to try to use Zoom this week and see if that doesn't fix it. So I'm going to go ahead and share my screen and we're going to get right into it. Let's see here, screen, there we go, start. All right, you are sharing your screen, very good. Let's get into the newsletter. So last week was a lot of fun. We did the singles day strategy and worked on low float Chinese tickers, and a few didn't go. It wasn't as widespread as it has been in years past, but the ones that went hard. And the big one for us was TANH. We had mentioned that they were going to be a runner from the past, but then we noticed about a week ago that they had a reverse split plan. So we were waiting for that reverse split. It was finally announced and done 2 days before singles day, caught the low, and it ran on singles day pretty hard before actually ending the day red, which is typical of these low float. They're not scams necessarily, but they are playground stocks for people who like to swing and day trade, and they're extra volatile. So anytime with any ticker like that, secure those profits, protect them as they come, and then you move on. This week, my focus is going to be returning kind of to oil and nat gas. We had the nat gas spike in that first week just before Halloween. And it happened earlier than anticipated, and it hasn't happened since. We've had big Mondays, which is really just the effect of a weekend where it's been cold and 2 days kind of wrapping up into one when it shows on Monday. But now we have a situation where we're still in the middle of winter. If we have any cold snap go on to the East Coast, especially in the states where there's high nat gas heating rates for homes, we're going to see it again. And so I'm going to keep my eye on BOIL, which is the ETF, TELL, which is a smaller cap nat gas producer. There's also Southwestern, SWN, things like that. And I'm just going to be monitoring it. Nat gas is incredibly volatile. And just like in weeks previous, Monday's a big day, and then Thursday's a big day. Monday, because you have the weekend where it's got to adjust when it opens, even though it's been selling and there's a market for it all weekend. And then Thursday is inventory. So Thursday is a big day for it. And that's kind of when you know, if you're playing the quote unquote run up or the rumor periods, Thursdays is when you kind of want to avoid. But if nat gas has been selling off all week really hard and we're in the middle of winter and you feel like the probability is inventory is going to come in a little bit low, that would be bullish for the price of nat gas, and maybe you end up playing the event. Either way, that's Thursdays. And as we're getting into China reopening and all those things that we've mentioned in the previous weeks, oil is starting to look a little bit more bullish too. And we actually saw oil get up to 95 a barrel last week. So we'll see how futures open. Crypto was hammered last week because Sam Fried, the guy who owned FTX, lost $11 billion in 48 hours. You should go read about that. It's a fun read, I guess, if you are someone who might think crypto is full of scam artists. It's certainly a little bit Enron-y. But the story, in brief, it caused FTX to go bankrupt. $2 billion is now missing. There's a whole bunch of other things going on with that. And crypto took a plummet because of it. A lot of those things started to see recoveries towards the end of the week last week. And I'll be keeping my eye on Bitcoin and Ethereum especially. And then I listed here in the intro, just CLSK is a main kind of target of mine when I start to focus on crypto. But I'll also look at MARA, RIOT, GREE, ARBK. And I wanted to just kind of note in the intro, as far as my personal subjective opinion, I'm not necessarily bullish crypto. I feel like there was an overreaction and we're going to see an overcorrection. So that's what I'm going to be looking at. I'm not in any of these tickers right now, and I'm really going to monitor the text. It's not a guarantee. None of them made it into the lower 10 picks, as we'll get into in a second. So let's actually get into that right away, because what else are we here for? Let's start with REBN. This one showed off on the Swings and Scalps scanner on Friday, and among the ones that I looked at, I really like this one because it showed the range of what had been, possible in the past. They also got an initiation coverage initiation from I can't remember who it was, but one of the main analyst firms, and they had pegged them at, I think, $6 or $6.50, and it's quite a bit higher than the current price now. So I was thinking maybe that could be a little bit of a catalyst for a reversal coming into this next week. We also have a pretty heavy rate of technicals in the bullish range The ones that's missing is that TTM trend, which is just glaringly obvious because those are red and blue and those arrows. But it shouldn't be taken as like the hold all end all. You know, it's just the TTM trend. Scalper and PPS are showing up. The Williams is showing up. MACD and DPO Mobo are kind of there. DPO Mobo is neutral, but that's because it spiked up bullish and then it fell back within the Mobo range, which is those three thin pink lines. When the green line gets back inside those, from just a technical, like definitive sense, that is neutral. So it's listed in neutral, but it's kind of been bullish very recently, and it seems to be bottoming out here. So REBN is one. QS, this is going to be among the theme that you might see in the newsletter last week, and this one especially is I'm looking at more mid cap and large caps, specifically for options plays. I would like to play calls when I play these, but the technicals we're looking for the same. In the case of QS, it is kind of showing topping out technicals, but at the same time, that Williams stayed high, which the Williams has to go below -50 if it's going to come down in price. So I am keeping my eye on QS. I don't think I'm going to rush into it. I have a delay on it because the technicals are showing a little bit of a topping out, but it could be one of those where it just kind of, in a bullish sense, gets rejected back into in a bullish way. And there is that ascending triangle. I think anyone who just looks at the chart can see there's a pretty clear triangle there with a price target around $8. Even though that's not very far, the calls, you know, might be worth playing in the case of a 50-cent move, or even if it gets to 8.50, that would pay off pretty well for the calls. So that's that. The next one we're looking at is BBD. Honestly, I'd never heard of this one before. It's a bank stock from Brazil, some other, definitely not the US. But the chart is exactly what you look for if you're playing kind of, you know, oversold reversal charts. It sold off down, and as it sold off down, let me take a screenshot. Maybe I can at least highlight what I'm talking about as I'm talking about it here. So here's a screenshot. As the price went down here, price goes down. That's the accumulation distribution. That's a supply and demand variable. And the fact that it was going up while the price was going down is abnormal, right? It's a sign that somehow demand is increasing even though the price is falling, which is not what Econ 101 theory suggests, right? Price goes up when demand is increasing, price goes down when demand is falling, holding all else equal. There's something strange going on here, and the market has to adjust for that, somehow correct for that. So there was a rise in demand during the sell-off. We have reversal text in the TTM trend shifting blue. The Williams is over -50 slightly, but it seems to have kind of crossed that threshold. The MACD is still in a bullish, slightly bullish, maybe new. I put it in neutral, I guess, but it's the spread ended. The spread, when the green line is separating from the purple line, that's where you call it bullish. And I guess they're kind of even now, but they're still headed towards that zero line. And if they continue to go up higher on Monday, that would be a sign that it's going to continue. DPO is just inside that mobility range, which is a neutral sign, but it's more of a consolidation sign. So as long as this can hold that low, which I believe was 272, I'm feeling pretty good about it. I have my suggested stop loss, actually 259 to 264, just to give it some wiggle room, just to give the market makers that extra little space in case, you know, maybe some people enter and they put a stop loss up and the market makers go, oh, hey, I want those shares on the stop loss. You know, I don't want to get hit by those. So I'll probably lower it just a little bit lower, and I'll probably use a alert, like a price alert from one of the apps you can get instead of an actual stop loss, so that I can pull out my phone and sell manually. Because if you put a stop loss up there, it does show up on the L2, and it doesn't mean, it's not like market makers can see it. Everyone can see it. It's on the L2. So anyone who's trying to manipulate and trying to steal those shares, maybe if there's such thing as a stop loss rate, that's when those things happen. So let's see here. That was 1, 2. We went over 3 so far. So let's do 2 more. You just saw that one, but let's jump ahead these 2 because these 2 are kind of fun. Perigo, I don't have the fundamental story behind this. I just see very, very strong text. It sold off on the earnings, but accumulation distribution shot up, which is one of the demand variables. Accumulation distribution is the demand variable for market makers who are trying to make a quick buck. So large pocketed short-term traders were buying this dip over the last couple of days. Then the technicals have reversed. The accumulation distribution dropped down to flat 0, basically, but that does not necessarily mean they're selling. What that means is they accumulated all they wanted, and now they're just waiting for when they legally have to sell into a spike. And so market makers seem to be anticipating a little bit of a spike here. They will take the earliest and easiest profits, and they will get compensated for losses. So you have to keep that in mind. But PRGO is one of the bigger pharma stocks. They have an options chain, which is probably very lower IVs is my guess, which would be more affordable. And I'll probably be looking at PRGO calls right off the bat Monday. It really depends on what futures open at. I'm starting to do these videos before future opens, so I don't know exactly what the wider market's going to experience tomorrow. But if I wake up in the morning at 2 or 3 in the morning and I notice that futures are very green, then PRGO will probably be on my main target list. The last one to hit on, Eli Lilly. You got Eli Lilly fell because let's see, they had two people, random people, create fake Twitter accounts, and then they bought the blue check mark, right, for the $8. That whole drama thing going on, and then they posted they're going to be giving away insulin for free. It's laughable, right? I've been a customer since I was 9 years old of insulin to keep me alive. I'm a type 1 diabetic. I have spent hundreds of thousands of dollars on insulin. They have never offered me a single bottle for free, not even as a replacement for when one goes through the washing machine, like nothing like that. So it's laughable that people believed it, but sure enough, they believed it, and they sold Eli Lilly off pretty dramatically. The calls are going to be where I'm going to focus on. If this doesn't recover before pre-market closes and regular market opens, I'm going to be playing some calls just to get this back up to 365 to 370. There's no reason for the fall off. There was no impact on the bottom line. It has been proven over the weekend that those Twitter accounts were fake. Eli Lilly came out and said there's no way we're giving away free insulin. It was a complete mistake. And those are the kinds of things, they're almost, what is the word? I can't remember the word for it anymore, but when they're basically priced in two different markets and one's higher than the other, you can buy in one market and sell in the other. Arbitrage, there's the word. This is almost an arbitrage, right? Because it was a fake news event, and everybody, it doesn't matter, it's not political. It was a fake news event that caused Eli Lilly to drop. And if the opportunity is still there Monday at open, I'm going to take some calls. All right, so that's Eli Lilly and PRGO. There were quite a few kind of larger cap companies in this. There are still the smaller caps at the end of the newsletter. And if you'd like to subscribe to the newsletter, you can go onto the website and you can grab newsletter and alerts, or just the newsletter. To grab alerts, you'll be in the alert group that I send my buys and sells to, and I answer questions. I had that both as a Discord private group, and then we have the free Discord public group where I'm on all day with a lot of really smart people. So if you're on Discord and you haven't joined our group yet, I'd really highly recommend it. Some really great traders sharing pretty cool ideas. And when I'm available, I jump in with a chart or two and join a lot of their ideas, or say, I'll watch on the sidelines. And I often watch the sidelines as they make their money. So it's a good place to be. Last thing I want to mention is we are 2 weeks away from my seminar, the technical analysis seminar, where I'll be teaching people how to make very strong trades using technical analysis, which is objective data. Not the loudest voice on StockTwits, the technical analysis where the numbers, you can look at multiple platforms and see the same numbers. They all mean the same thing. It's backwards testable, so you can look at previous charts of things that ran last week and see, oh, the Williams went over -50. Oh, the PPS showed up. Oh, the TTM trend was blue. All those things are always true when there's a bullish expansion. So I'm going to be teaching people how to do that technical analysis on November 26th and 27th, full stomachs, nice, easy, slow weekend. And by Monday, you're going to be trading with a ton more knowledge than you had. Every strategy out there for how to trade could use the technicals, because the technicals just reflect current market data. If the market is bullish and the reason you bought it was because they have a catalyst, that's great. The technicals will go up, will be bullish while the price goes up. They can't do the opposite. They literally cannot. That's why they're objective. And that's why I'll be teaching them. Anyone who joins the seminar will be getting both textbooks and 2 scanners that we built that use exactly what I teach in the textbooks. The computer does it for you. So it's a great tool for people who are learning. You'll see the scanner pull results, and you'll be able to look at the chart and go, oh yeah, I see exactly why that's bullish right now. And you'll also, if you want to, you can be lazy and you can just use the scanner with a smart stop loss strategy and play the game that way. I highly recommend learning. I think understanding why something works is really important. And I really look forward to anyone being able to join next week. So, all right, guys, good luck this week. And I look forward to seeing you.